Welcome to TheoTrade. This is Don Kaufman. It's July 25th, 2016. You are watching the Theo Night video. The S&P sold off mildly today, down about 5 points on what is relatively light volume. Once again, doing about 1.2, 1.3 million S&P contracts. Again, this week is kind of a sit, a wait. It's a week of the central bankers. So the FOMC meeting kicks off this evening, this Monday evening. Really, the meeting itself is in full swing on Tuesday and Wednesday morning. Of course, Wednesday morning, kind of midday, the FOMC will have an announcement over there. But the markets themselves are not pricing a tremendous amount of risk into these FOMC meetings. I want to just point out that the 4-day options inside of the S&P are only projecting about a $22 expected move. Now, with this kind of wait-and-see attitude in the markets, again, they didn't grind higher today. They sold off a little bit. Earnings, again, is taking front and center, and really tomorrow after the bell, and that's Tuesday. That's July 26th after the bell. Of course, we'll have the largest market cap in the known universe, which is Apple. And so Apple's earnings will be after the bell. So what we're going to do during this video is we're going to explore a little bit about Apple. We're going to take it, I think, to the extremes, if you will. What can you do around Apple's earnings? Or more importantly, let's just try to get a feel to understand what markets are telling us about Apple earnings. Okay, first, let's go and open up the 4-day options. Clearly, the announcement is going to be, again, after the bell on Tuesday. So what we're looking at right now in terms of what's the risk in Apple? Like, what's the market pricing in? And you're looking at about a $4 risk. So what that really amounts to, and I want to be very, very specific about this, is we are looking at what's termed an expected move. An expected move is based on one of these guys, right? A distribution curve. So here's Apple at about $97. Let's just peg it at 97 bucks. This expected move says it can go up about $4, right? Or down about $4. Now, there's absolutely no directional bias to that expected move. It just says right now the market's pricing, hey, we're going to move up $4 or down $4. The question is, do you believe that? Well, okay, you should. There are billions of dollars being traded on either side of these options. Like, look at the volume in here today, all right? Just ridiculously heavy volume. However, what have previous earnings announcements told us about Apple? Well, let's go do some homework on that. And to do some homework, first we look at a chart. Dun, dun, dun. I'm bringing up a chart. I don't often do that. But if you look, again, here's the earnings announcement. Look back to the previous earnings announcement, another previous earnings announcement, and we can do that. So how can we look back at previous earnings announcements? Well, you can go over to the Analyze tab on Thinkorswim, and you can go into back data. Right? And what back data ultimately does is allows you to go and say, like, okay, what happened during the earnings in April? Okay, and again, you just got to look back at what the date was and go, all right, so the earnings, they basically came on April 25th. So you got to go to the Analyze tab and go back again into your calendar. Just go over here to April 25th. Now, this is the day prior to the earnings. Take a look. It's a 4-day option. It looks like just like right now. But what I want you to see is in the previous earnings announcement, this was a $105 stock, but the expected move was almost $5. Okay, so the expected move was just a bit higher than it currently is. However, more importantly, how did it play out? And then you go and you look and you go, all right, so here come the earnings. And again, it's a $5 expected move, and boom, it moves $6.53. So, again, let's do the before, the after, right? Before, $5 expected move. Look, it's a $5 expected move. After, $6.53 actual move. So, did the market have it right? No, we moved more than was expected. When that means if you sold options in Apple, you were toast. And just do this again and again and again and again. And you can go back through a previous one. You can go back to, again, here's another earnings announcement. And I'll take you back through one more, which is January 26th. So go to the Analyze tab. Come back in time. All right, this is just end-of-day data, but it's more than suffice. So go back to January 26th. Now, here's an interesting one. Look, we're trading at $100 on the button, which is pretty much where Apple is right now, right? So it's trading about $100 on the button. But take a look. There's almost a $6 expected move. There was a lot more volatility in the marketplace. So what happened the very next day? Oh, moved $6.57. Ironically, 2 earnings announcements in a row, stock moved the exact same amount. So when you start to look back at a few earnings announcements, you're like, well, wait, this implied volatility, first of all, and this expected move, it's low. In previous earnings announcements, the volatility in the expected move has been higher. So if you sell options coming into the Apple earnings announcement, you ain't getting paid a whole lot to do so, right? You better know that. The next thing, okay, now this is a little bit more technology. Here, this is the TheoTrade probability calculator. Now, what we have actually done in this probability calculation, and again, forget all the big scary numbers on the screen. Forget about it for a second. We actually did is we're looking right now at a 5-year distribution. You're like, what? So these are actual returns. All these little hash marks over here are actual returns of Apple over the last 5 years. And here, laid on top of it, is a log normal distribution curve. And you can see that there are a number of what we call outlier events. But generally speaking, the day-to-day returns of Apple are almost as predicted by a normal distribution curve. Again, when I say there's outlier events, if you look, and I'll freeze the screen one more time, but if you look right in here, or right out here or out here, these are a little bit more of outlier events. What that means is we moved substantially more than expected. And Apple does have a number of those type of events occurring. So again, we can look over 5 years. I can even pull the data for like 2 years. So I can show the theoretical probability chart over 2 years. Over 2 years, there's substantially more outlier events. All right. And again, this stuff is critically important because, people go out there and they just blindly accept whatever option model is thrown at them. But they haven't actually gone and done their homework and said like, well, now we're looking at the last year. Look how many events happened, in Apple that were, well, odd. And the answer is a lot. And most of those events, though, were to the downside. So when you start looking, again, a little bit more in depth at this, it kind of makes you want to, change the way maybe you have a perspective on a trade over here. Now, when it comes to earnings, there's only a few things that you can do. So what can you do around an earnings announcement? First of all, anybody that says, you're just going to go out there and you're going to sell volatility. I'm going to tell you right now, I wouldn't do that in Apple. If you're just going to go sell premium in Apple, you're going to get run over. It might work, but statistically speaking, you're going to get run over. What I'm saying is don't go out there and just sell naked calls or naked puts. Don't go out there and just sell the iron condor because this product has moved many times beyond what was expected. That's the first thing. The next thing you got to know, you can do a couple of different trades in here. You can get bullish, you can get bearish. Maybe you want to buy the expected move. I'm going to show what that means momentarily. When I say you want to get bullish, you want to get bearish, and I'll just give you an example. If you wanted to get bearish in here, you could just go out there and buy the 98s, sell the 96s. Look, this is a 98-96 put spread. This is a bearish trade. You don't have to be bearish. You could be bullish, but this is a bearish trade. Buying the 98-96 put spread for a 91-cent debit. If you like it, fire at will, right? And if Apple's earnings come out and Apple's like, it turns out that the iPhone sales were not nearly as good. The Apple Watch that Don is currently wearing is really not that good. But I don't think Apple relies on their Apple Watch. By the way, the watch, it's really not that good, I promise you. Anyway, if you want to take that bearish bet on Apple, there it is. And just risk 91 cents. And if you're wrong, I'm sorry, you're going to walk away from 91 cents. If you're right, you're going to make maybe $1. Done. You want to get bullish? Just do the opposite, buy a spread out there. And then listen, there's a ton of different spreads that you could do. You could do like the 95.5, for instance, 98.5. Look, here's a bullish spread for $1. Don't get too cute. Don't go out there and buy a call. It's a low probability trade. Now, I just showed you a bullish and a bearish trade. But maybe you think that Apple's just going to move huge. What does that even mean? You mean it's going to move huge? It's going to move outside the norm, outside what's expected. Well, you could actually build a trade for that. You could do like a buy the 101s, sell the 103s, that's buying a way out of the money spread. That's a $4 out of the money spread. I'll go $4 on the other side. And for instance, maybe we go buy, for instance, these, and we could use even half strikes in here. Again, I don't want to get too cute, but here, let's go out and so again, we're clear. I bought the 101s. I didn't sell them. I bought them. Okay, let's buy these 93 halves. I'm going to open up a few more strikes in here. So I bought the 93 halves, and we'll go out there and sell, okay, those 91 halves. And what I'm actually looking at over here is, for example, I apologize, I should have bought these little monkeys here, not sold them. What we're actually looking at in this particular trade is the purchase, again, purchase of an iron condor, not the sale of an iron condor, but the purchase of an iron condor. You're like, well, what does that even look like? You know, we can come over here and we can analyze the trade. It means you think we're going to move outside of the expected move. Now, I wanted to throw this out here because so many people are talking about you got to sell options, you got to sell options. Well, you can sell options in here, but I'm actually betting for a move outside the norm. Now, again, it doesn't mean it's going to happen. This is a lower probability trade, but I want to give you a feel of how to do more than just sit there and go like, well, I think we're going to move inside the $4 expected move. Well, if you think we're going to move inside the $4 expected move, don't buy the iron condor. You can sell the iron condor. See, the fact of the matter is there's a fair and two-sided market for everything, right? What we've learned about Apple does have tendency, okay, to either move at least $4, possibly even more than $4, which makes selling options premium not all that viable. Now, some people do not like to buy options premium, but I don't like the blanket statement of don't buy options. I actually believe in the right circumstance, you can absolutely sell options. And again, everything that we look at in terms of technology is telling us that, hey, you know what? An outlier event could happen. And that just means a move larger than that $4. And that's exactly what we're going to be looking for inside of tomorrow. Again, if you want to get bullish, you want to get bearish, okay, don't get too cute. Just use very, very small spreads. And this is something I'm going to be covering a bit more detail in the TheoTrade chat room tomorrow through the session. We'll look at a number of different trades. Listen, it's earnings. There's no right, there's no wrong. There's just the right trading logic, okay, applied time and again. Thanks, everybody, for joining us here at TheoTrade. Enjoy the evening. Bye-bye.